You made the last payment on your car. You did everything right, and your credit score dropped 40 points. If that just happened to you, no, you didn't break anything. And no, it's not a glitch. People post the screenshots every single day. Paid off the student loan, down 30. Paid off the mortgage, down 60. The comment sections are full of the same stunned question. I did the right thing. Why am I being punished? Easy. Breathe. Watch this. Because the answer isn't hiding in some fine print. The answer is in what a credit score actually is. And it's not what you think it is. It never was. Let me show you where it was born. California, 1956. An engineer named Bill Fair and a mathematician named Earl Isaac put $2,000 together and started a company in San Rafael. Their product wasn't a loan. It wasn't a bank. It was a question turned into math. And here's the part that explains your 40 points. The question was never, is this person good with money? The question was, if we lend to this person, will we get paid back? Read those again. They sound like the same question. They are not even close. A person with zero debts, zero cards, zero loans, someone who buys everything in cash and owes nobody anything, is, by the first question, a financial black belt. By the second question, they're a blank page. No evidence, nothing to predict with. The math literally cannot see them. There's a name for this in the industry. Credit invisible. Millions of people. Invisible not because they failed, because they don't borrow. Hold that. Because your 40 points live in the exact same blind spot. When you paid off that car, here's what the formula saw. Not mission accomplished. 3 other things. Gear 1, an account closed. The score watches your open, active accounts, the ones generating fresh evidence every month. Your car loan was a little machine that stamped paid on time, paid on time, paid on time, 12 times a year. You didn't just pay off a debt, you unplugged your best witness. Gear 2, your mix shrank. The formula likes seeing you handle different kinds of credit at once. A card, a car, a mortgage. Pay one category off completely and the mix gets thinner. Less variety, less evidence, lower estimate. Gear 3, the clock. Closed accounts eventually stop counting toward the age of your file. That loan you managed perfectly for 6 years? Its testimony doesn't vanish overnight, but it's been moved to the archive. The courtroom only wants live witnesses. Quick break, because this trips everyone up. This paradox is about loans. Car, student, mortgage. The kind with an end date. Paying off a credit card is a different gear entirely. Cards are judged month to month on how much of your limit you're using, so clearing a card usually pushes the score up. Same machine, opposite result. Loans close a witness. Cards free up a meter. If you've seen both happen and thought the score was drunk, it wasn't. It just has 2 different gauges. Notice what's not in there. Nowhere did the formula ask, does this person have savings? Are they stressed about money? Did their life just get better? Not its job. It was never its job. It's a machine built in 1956 to answer a lender's question, and it still answers only that. And if you're thinking, so all those years of discipline meant nothing? No. Your payment history stays. This isn't you being bad with money. This happens to basically everyone who finishes a loan. It's so common the score companies themselves publish articles explaining it. You didn't fail the test. You just found out what the test actually measures. Now, turn the canvas. You thought the score was a report card on your financial health. Look at the drawing again. It's a report card on your usefulness as a borrower. Active file, diverse file, long file, a person mid-relationship with debt, handling it gracefully. The moment you finish the relationship, there's less of you to grade. It has a name. The perfect borrower paradox. The score doesn't reward being done with debt. It rewards being in debt beautifully. And here's the part I need to say with a straight face, because this is where people get hurt. None of this means you should keep a loan alive to farm points. A paid-off car is real. 40 points are weather. The number drifts back as your file keeps living. The car stays paid. Anyone who tells you to carry debt you don't need, To please a formula from 1956 is reading the machine backwards. But now you can read it forwards. Next time your score twitches, up or down, you'll ask the machine's own question, not yours. Did my usefulness to a lender change? That's all it's ever answering. Your health you measure in other places. What you own, what you owe, whether you sleep at night. The score was never the mirror. It was a lender's periscope. That punch you felt when the number dropped, it was never a verdict on you. It was a machine, built before your parents were born, doing exactly what it was built to do. See the machine. Don't be the fuel. We draw one machine a week. The next one is already on the board.